Report, where I share my 46 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, Nvidia definitely performed and is delivering. Overnight, we're up over 1% right now. Got a lot to talk about. Is risk back on? Are we back into the bull market? Let's get into it. Well, welcome everyone. I didn't put out any announcements ahead of time. I told you I'd probably come back up today. We definitely got delivered with a lot of new information. Of course, Jensen Huang is out absolutely doing the victory rounds, and Nvidia has performed quite well. Futures are up actually right at 1% right now, actually 1.1%, and they've sold off from their highs, but we're seeing a lot of activity here. So what I want to do tonight, last night I kind of went on a rant about the Bitcoin situation and what's going on there. We'll talk a little bit more at the end of this video about that. But basically what I'm looking to cover tonight is try to set up the rest of this week coming into next week, as I am going to be out of town next week for the holiday, and I'll announce some schedules. If you're not on Substack, make sure you go to kendallreport.substack.com, sign up for free. At least you'll get announcements, and you'll see I usually do 2 or 3 versions of the report every week. So make sure you do that. But it's interesting I watched interview on Bloomberg with Jensen, and some of the things they're talking about. They've got they've got to keep coming up with new products, right? They're a chip company. So, they've got a whole another round of stuff that they're building up, and it's rah, rah, rah. We're sold out of all of our web-based stuff. Or I think the data centers get lots of chips for sale, right? So we're seeing, I think, up about 4% last I looked on Nvidia. So, but one of the things I talked about last night was I thought we would see a bit of a rebound in the S&P. We would see Nvidia rally, but I don't think this is a new high rally that's about to come in. So we'll go through all those details. I think we'll do possibly a right shoulder. It might be a little scarier, but I also talked about I thought we'd get a year-end rally. So we'll see what unfolds here. There's still some upward projections and things to talk about. But in tonight's video, I'm going to go through a normal sequence of events. We'll go through the database. We'll go through the indices and just kind of go through a normal flow, and we'll see what kind of things come up. So let's go ahead and get right into the database outlook here, and so you can see what's going on there. Okay, so looking at the database here, we're at 15.92, still seeing some selling coming in. So it's, in spite of, we'll call it a stable market today, the selling continues to come into the database, the short-term database. On Friday, there will be, we'll run the intermediates, and we're still up in the 60+% handle. So we're a long ways from any real triggers, 60 to 58. I'm probably not going to be able to, not only will I be out of town, but the Substack letter, I'll put the announcement out in there, will also be a little disrupted. I'm literally leaving on Friday morning. So I'll update you on what the schedule looks like. And the good news is this year I'll probably be home at the end of the year, so I'll be more engaged as we get into December and all of that. So there'll just be a few-day break here. So anyway, but if we look at the database at 1592, as I've been talking about, we're in that cycle I call full liquidation, which takes us to about 12%. The most that this database usually gets is, the worst I've seen it, we'll say, is 6%, but typically around 12%. That's it on the short-term database. And then we see if if we stay down in below 22% on the database, we'll see if we start to see some effects on intermediate models and those sort of things. I'm getting a little sense that we're getting a bit frothy up here. Like I said, I think after some type of rebound coming into mid-December, I'll be able to nail this thing down once we get into the next 2 weeks. So we'll get all that straightened out. So, but the database, full liquidation, heading for 12. Nothing really here to see. That doesn't mean we can't still rebound a bit with a low database on a short term. We'll probably stay under 22. I don't even think we'll get up to the 38%. So I'm also going to try to be fairly efficient tonight to get through the information. So let's go ahead. That's really all I've got. Before I move on, let's just move this in here where I've got the sectors up here. And we're looking at, we've got consumer non-cyclical, energy, healthcare, transportation. There's two of these are positive. One of them's been on. Healthcare has been on a big run. It's 69 days. It's exceeded its normal holding of 45. You'll see over here, and it's up 15.7%. And this is a huge sector when you look at this. Let me just bring that up for a second so you can see exactly what that looks like as far as the sector rotation goes here. So we're looking at right now, typically, just trying to get the right thing to come up here. Sorry about that. So typically what we get here, if we come over to healthcare, you'll see it's a pretty large sector. We've got 262 symbols in this sector. And right now, 113 are long, 149 here. We've got biology and drugs still long. They're kind of driving things here. The drugs are up 18.7, only up 6, and we're looking, it's exceeded, almost doubled its typical holding period. So that tells us that we're closer to an exit there. So that would take us down if we just go back to the sector level here. What you'll see is, on a sector basis, we're down to 4 sectors long. So that will put us at 3. We've got a couple other negative patterns that are in here that are likely to kind of peel off and maybe even get leaner as far as the sector and group participation. They're at 33 and 26%. And this is just what it looks like when you're in this liquidation mode. So even though we're reasonably close, we've been range bound. I expect that will be the continuation of this pattern, is that we'll just stay in the range bound. Now, when I go through the S&P, I'll talk about where those range levels are. In fact, let's just go ahead and let's go there. I also ran the data sheet because I want to see what that looks like as we go into the end of the week and set up next week. So I'll do my best to set you up for next week. So here's the data that's coming through right now. We're looking at, this is what I was seeing last night, is that we're looking at a slight rebound, but overall we're going to hit the ceiling right here, pretty much where we are right now. I suspect we're up 1.1% on the overnight right now. I think what we'll see is probably some selling coming into London. Maybe the London folks will retest the highs of the evening, but most likely we're probably seeing a reasonable top here, likely fade into the U.S. Open. Probably stay positive, but be watching some of the action in Nvidia if they give back the trade. And I'll bring up Nvidia, and once I go through the indexes, we'll take a quick look at that. But the configuration here is just telling us that we're going to see more of of the same. We're going to get up into this moving average area around possibly 68, 80. And, that's going to be about it on the upside. And we'll just stay in the sideways range going forward here. Nothing really exciting from that standpoint. So let's go to the weekly, because that's going to help set up as we look out just a little bit further. Bit of a rebound off the 21-week moving average. We came down toward it anyway. That number right now is 65.70. I've been talking about hitting the 65 handle, and we keep getting these little mini bounces here, and we've got another one, but we're right into the 10-period moving average right now, which is currently at 67.40. So we're trading 67.35. But we see this on the intermediate, which I discussed last night. We still have this upward slope into, it's actually projecting into next year. This is a little far out for the predictive math that's in here, but you can see even the red dots are trying to stay above this 10-period moving average. The highs aren't that far away. The high was just a few weeks ago, and that was at 69.53. There is Fibonacci targets around 71 that I've talked about before, still valid. I think I had said in a video in past several weeks that we were looking at the potential of getting to above 70 handle, maybe 71 by year end, and that's still somewhat realistic, although some of the metrics have faded a little bit. So I'll update you that. Like I said, I'll be gone next week, but then we'll be back into the game. I'm getting to the point where I can be a little more consistent on some of the analysis. And I'll also be bringing in some educational stuff when we get into December. You can see the general view. The 40-period moving average on a weekly is showing some, you can see the angle of attacks being forecasted to increase. That's going to be our real base, probably around that 6,500 as we go down this trail. And basically, my view of this is that for the next several weeks, we're just going to stay there's a fairly low probability that we'll be able to get up and make a new high. If we do, I think we get a rejection right back into the range. I'm not sure there's going to be anything out there that's going to be able to drive this market and get a big momentum surge. Just talk a little bit about what we saw. Today we finally got some metrics out. And employment's still showing positive numbers. The Fed minutes are showing that they're not really that excited about dropping rates. I think there's still a shot that they will, and I've been preaching this for 2 years now, so I know you're probably tired of hearing me say this, but the reality from my viewpoint is the Fed wants not only wants, but needs to get us into a steepening yield curve. If you look at the 2-year, you're printing around a 350, just below 360 range. But if you at the front end of the curve, which is the 1 year and the Fed funds, you're still 375, 4% range. We need that front end at least down at 3.25. So in my opinion, you've got another 50 to 75 basis points on the downside on the Fed funds on the front end of the curve. I don't believe that's any kind of accommodative or QE or whatever you want to call it. I don't think that's what's happening. They are cutting off all of the selling of the securities, and they're taking the runoff from the mortgage backs and buying treasuries, and people are equating that into some QE operation. I don't believe that is all going to be the effect, and I don't believe they're in a loosening cycle, which you hear all the time. And I think they're just driving. This was something that Powell said. I claimed that I must have been the only one to hear him tell the truth one day, which was a better part of 2 years ago, when he basically said they want a normal shape of the yield curve. And that would be what I'm talking about, 75 basis points at least minimum. $1.25 would be even better, or you could even get the Fed funds down to 275, and the back end of the curve is going to stay around 4%. And when that happens, then Bob will be bullish on the small caps. For right now, the small cap noise and talk is just noise. It has been for a couple of years. You know, it took them forever to print above, you know, and make a new high, and then immediately retraced again. So, but this is the basic setup. It's the same setup on the NASDAQ. Let's go ahead and just go over there for right now. We'll go top down, which we'll start with the weekly here. As I said, you get down to about the 21 period moving average. The metrics on here look a bit weaker. So even though we've got a slight upward slope, it's starting to roll over slightly. And I think that is really the key, which is just telling us sideways chop. And if you wanted to argue, we did make a new high in this pattern, but overall it rallies, pulls back, and that's going to be a continued theme in my opinion. I don't see, you know, if Nvidia is driving the world, and this is all we're getting from this, then, you know, I don't see it as that exciting. And we're going to go right after cover the NASDAQ. I'm going to go ahead and bring up Nvidia, and then we'll look at gold, which we did not do last night, and we'll do Bitcoin. Should be able to get out of here, hopefully in 35 minutes from that standpoint. All right, so let's go to the daily real quick, and then off to Nvidia. So this is where I didn't show you the daily on the S&P. I don't believe I brought that up, but here's these upward projections. We've already satisfied Fib target 1, which came in, that was at 26,527. The high in this pattern right here, 26,399. So that satisfied that Fib target 1. We are seeing the potential for this rally in the month end, and then back to the chop. At least that's what's being forecast as we can see it right now. And it looks to me just like with the S&P, these moving averages here are going to be somewhat of the ceiling. We may be able to print above it, but nothing drastic. So the money you're going to make is going to be twofold on both the S&P and NASDAQ. Is even doing straddles, and trying to collect some premium over as we come into year end, at least in the next several weeks, or, you know, just trading futures and trading the range, and that range will be staying within the daily market grid. On the weekly, I'm going to go back to weekly for a second, and this will be the same thing. So if you have the indicators, just go into the market grid here, and the market grid's in a bit of that bubble formation. So it's going to take somewhere between 3 and 5 weeks, which is going to get us really close to, you know, coming into Christmas time, and basically seeing that volatility contract and stay locked in that range. And there's a fair amount of movement possible in here, but you'll see, and when we get the update on the weekend, you'll see it will collapse in. All right, let's go to Nvidia. So this chart does not reflect this is weekly, does not reflect excuse me one sec. This does not reflect the overnight, but if we look at, we're right here, 195 is going to be, so R1 is 196.11. We're basically, this is on a weekly basis. The next level would be 202, and the high print here that we had a couple weeks ago is 212. And if we come back here, we look at the market grid on the weekly, RXT would be 212. That would tell us that we could print up. You know, we're looking at Wednesday. There's only a couple more days in this week. I may be able to come up tomorrow, so make sure you hit the notification bell. But we're most likely going to see this market grid as we come in next week start to collapse. But this is going to be your ranges you're going to want to watch. We look at the algos, look at what's happening here. The projection on a weekly basis is continued loss of momentum. I think this is really just telling us we're going to stay around this 21-week moving average, which is coming through right now, is at 179. That's going to be your lower end of the range. You can look at the market grid again, and you'll see 177 S2 and S1 is 184. Let's look at this week's range here real quick. Yeah, so 179. So we basically did an S2 and an R1, and it may be able to expand in the next couple of days. We'll see how that all plays out. But the range that we're here for right at the moment is definitely suggesting we're going to stay above those levels, stay within the market grid. We should see market grid as we come in next week start to collapse in. And just so you know here, just real quick, if you don't have the indicators, you can go to kendallreport.com/indicators. They're 447 one-time purchase. That's it, and you're going to want to have them as we're going to release the data sheet configuration fairly soon. It's probably going to be in early December. I mentioned that we had some issues with Claude, so I think we got them all figured out in the last couple of days. So, but this is where you want to go right here is. And like I said, I saw somebody saying, I don't tell you how much they are. They're 447 one-time purchase. You get to have them for as long as you're around. That it is on TradingView, so you have to have a TradingView account. So, all right. So let's come back to, so I think everybody got what they wanted here. It's just a matter whether they can print these things back up. They're rallying the market back up 1.17%. So we're trading back up into the pattern here. But, you know, there's a lot of appetite on the long side. We'll see how it trades when we come into London tonight. So my plan is in the next 2 nights, the Kendall Report Substack will be out probably earlier than around or before the London Open. Tomorrow night's probably going to be pretty early, so I'll try to get everything together. All right, let's go ahead. We didn't get a chance to look at gold. I think gold has interesting configuration. In fact, I would argue that it looks sort of like this pattern here. It was in this big expanded mode, and we see the market grid closing down. This is a weekly chart on gold, but look at the algos. They're all heading south, and even the red dots, everything's pushing us down toward the 21-week moving average, which is right now 3,700, 3,712. It is rising every week, so it's probably 3,750. This market most likely topped out. We got the RTX sell signal, then we get the big reversal. This is a weekly, so several weeks ago, and now we're just consolidating this thing. But you can see the WTRs where the dots are, those are forecasted moving averages from the indicators. So they're showing us that as we look out, there's potential that upward slope is continuing, but you also see we're going to head sideways, could be into year end. So I suspect we'll stay within the confine of the lower end being the 21-week moving average. Look at the shorter term viewpoint here. And you can see once again, algos are flat here. The 40-period moving average is kind of collapsing, which tells us that that's what the weekly is telling us, that we're going to see a bit of a move down. As I said, we're at 4,095, probably heading down at least 200, maybe $300 from here, and see more of a downward slope just based on that weekly configuration. All right, let's do Bitcoin. Been doing a bit of research, and I want to, let me come back up on screen for a minute. I think I figured out what's going on with Bitcoin here. There's some mass liquidations going on in the ETFs. I went in last night talking about everybody wanted to be legit and wanted ETFs. But what's happened here is, and this what the whole article that I wrote that's on the Substack, I think I pinned it to the top. I think it's free and it's pinned to the top of my Substack. But the whole point here is that you're seeing a lot of liquidation. And meanwhile, the Tom Lees and Saylor and all those characters, I even saw posts, people are, I contrasted this last night, but it's really baffling to me as everybody tells you Nvidia is a bubble and it just keeps going up, and everybody's telling you that Bitcoin is a buy of a lifetime. I saw posts going back several months ago that it's never going to be under 100 again. It printed 88,000 this morning. My point here is that you're seeing a lot of liquidation. Folks are selling. I have fairly big, I think I've got about 12 or 15,000 advisor types on my LinkedIn, and these folks have been pushing Bitcoin to their clients. I would tell you that retail clients in the environment with advisors have, like, their tolerance for risk is almost zero. You lose my money, I'm not happy. Their phones are ringing off talking about Bitcoin, and most of them don't even know what Bitcoin is or how it works. So they're bailing. And guess what? They're not coming back. They're not going to be able to convince those customers or others, and they're not going to have the confidence to pitch this thing again. It seemed like the thing to do, and my argument has been, go back to the chart here, my argument has been, let's bring up Bitcoin. My argument has been for a while, let me go to a weekly, is that this whole pattern has been a big distribution pattern. So going back, so ETFs, this was the first surge. We pulled back, and then we just went. Whenever you get, quick pro tip, whenever you see a pattern where it's stepping, but it's overlapping the previous high, people look at higher, most amateur thing you can ever say is higher. Well, it's got higher highs and higher lows. Okay, so what? The structure of those higher highs and higher lows are also important. And each one of these highs we retraced, and the lows of the next stair step went back below the highs of the previous step. Didn't make a new low from the low, but that overlapping tells you that the nature of the market is a collapsing or distribution pattern. So it keeps, and then the moves got smaller overlap, and now we're probably going to come down toward these levels down here. We could easily see below 80,000 here. We'll see it. I talked to. Let me bring something up here so we can bring this up. There is a weekly. There's a bit of a rebound coming potentially into January, February. So I'm not saying it's collapsing, it's going down to 70. Bob did not say that. So what I'm saying is it's now going to stair step overlapping on the downside. And the chances of this cycle being done aren't very high when you're looking at what's happening here. So whether it stabilizes, it gets back, I mentioned last night at 102 is kind of the pivot point. You come back to 102, everybody's going to scream, yay, we made it. and and the 4-year cycle. Michael Saylor's talking about this pattern that's been going on. This is just how it works. Well, as we always say, it works until it doesn't. And the concept that somehow there's this perpetual pattern in Bitcoin that it goes up, makes a new high, pulls back 30%, goes up, makes a new high, pulls back 30%, that it's that methodical and that predictable means that everybody on the planet would be wealthy beyond wealthy. If that's just how it works, you buy it, you let it make a new high, you sell it 30%, you buy it, you sell it. It's not that way, folks. It would be nice, but it's not. And I saw some guy talking about, all you need to do is buy Bitcoin, and you don't need work or nothing. Go do what you'd like to do. Go to the beach. Go to whatever. I mean, I'm still struggling with trying to figure out why. I mean, Saylor was on Tucker, so every place they can get out, they're screaming as loud as they can, lifetime opportunity. Meanwhile, the opposite's happening. Nvidia, it's a bubble, and it keeps making it went 1 trillion, 2 trillion, 3 trillion, 4 trillion, and it looks like it'll probably be 5 trillion the way that if Wang is right and pumping his company. As long as people yell the loudest, I always say, ignore the loudest voices in the room. And right now, the Bitcoin bros couldn't be louder, and everybody believes it. So I kind of got inspired this morning to write another article. And all the Bitcoin guys are going to hate me, but it's okay. It's just something that I'm seeing that I'm talking about here right now. But the point is, I'm not an anti-Bitcoin. I cover it every day in my newsletter. It's a great, and I'm not saying it wasn't a great trade. Okay, the point is, it's starting to. I've talked. I'm kind of still referencing the newsletter that I wrote the other day. The special report is 8,800 words worth of information there. So, we'll see how it plays out. I'm just telling you. Life and investing, unless it's you folks get a different error, and where I came from and watching all the markets and crashes and all that, every once in a while you got to have the big washout. And I've joked that if Saylor fails, you can buy all the Bitcoin you can find. And he was talking about our company's designed that it could drop in 80 to 90% of the value. Okay. Yeah, find any public company that does this. And I would be really concerned running my mouth if I had a regulated SEC company. I don't know where the SEC is, but I think they're looking, and they're paying attention. So they're always looking for something. Although, we got the Trumps involved in this as well. I got to call it like I see it. It's a little concerning what's going on to me from what we're seeing. Not sure what it's about. Maybe you guys can comment on this video if you would. I don't feel like you're pushing back. I don't have ideology. I don't care. I'm just looking at the charts and what's happening here, calling the distribution. I've been calling the distribution for a while. So we're probably pretty close. We made a new low in this move down to 88 handle today. Is there more? It looks like it. This is a weekly. It looks like there could be maybe an extension into first week of December. So my point is that it looks like these ETFs that everybody wanted, like I said, legitimacy equals didn't bring about what they thought, because everybody thinks if they get everybody in the world in here, this thing's going to be $1 million. Maybe it is. I'm just saying right now it's distribution. There's a lot of pressure. There's somebody selling that does not buy into the narrative, and it's got to be the ETF and the arbitrageurs and the people that I called out in the article that I wrote. So take a look at that and go from there. So that's kind of it. Actually, like 34 minutes, and that was most efficient. So I'll look at some of your comments and see what we can do here. See what we got going on. Was I a shadow trader from Iron? I don't think so. No, I was not. One of the other things I pointed out while I'm still kind of on this Bitcoin thing is that these market makers know how to dry up liquidity. And that's what's happened right now is liquidity is completely dried up. And there's, yeah, anyway, there's lots of issue. Yeah, and John saying gold made it. Let me just do GC. I think this is potentially, let me bring this up. This is a weekly. I think this was your wave 4. I think this was a 5 of a 3. I think we consolidate here. Basic Elliott theory is if this is a 5 wave, markets usually will pull back to the previous 4th wave, which would be 3,100. I don't think that happens. There's some other trends. This 21 period moving average on a weekly is pretty strong, but we're definitely going to stay within the market grid and get that collapse that I always talk about of volatility. So it'll come in once it normalizes. That's basically what happened right here. I'll just blow in on this here. This was probably the 4th wave here, and then this is the 5th wave move, and then we could get a big ABC. We could come down to the 40, but it's rising, so it's still that 37.50 when I covered it earlier. That's still a number. I think there's a lot of work to do, but we probably get this. This is what happened here. We got the surge up, get the big bubble. It took longer to consolidate here for this wave 4. It was kind of an ABC, XABC, and then we get this blow up. So we'll see what type of formation. There's still positive flow. There's still uptrends there. Appreciate you guys. Those, if you hear the dings in the background, it's people signing up for the newsletter. But appreciate that. Let me just look at some other. Yeah, you know something? I'm going to do something here, folks. I'm going to cover the U.S. dollar real quick. I said we were done. We're not. I want to cover it. Look at the dollar's going vertical here, and that does not spell good news for the crypto folks. And we're kind of getting with some of the things going on. You're probably getting a bit of flow of capital into the dollar right now, and I think the forecast right now, we've got 2 targets here, 102, and probably coming back up toward this 200-day moving average, and we got a really nice rounded bottom. I want to put something on here real quick. See if I can. I want to find the. Bear with me a second while I get this. I want to put the webs up here. By the way, that was a whole suite. There's 19 indicators in this suite. But this is like really, really good stuff. You can see these. The webs are not really proprietary. They're linear regressions. What's proprietary is the interpretation of them. There's another indicator in here where you can actually set up trade symbols off of signals off of there. But we get this, what I call this rounding bottom here, and all these webs are used for are pattern recognition. We get into a rope, and then when they start to spread out here, this was the flow. It's basically, there's another indicator called web flow, and it's just kind of shows you they're called webs because they kind of look like spider webs. I named them. I actually started using these in 1990 when I was on the Pacific Options Exchange as a floor trader. But what we're seeing here is we're trying to get into a mini rope here, which tells us these red dot forecasts for the Dow is a pretty strong forecast. And we look at all of the algos and the ppms and angle of attack that's building. It looks like that's going to build into early part of the new year. So anyway, so this is good. So it's 40 minutes. Let me look at some of these other questions you have. Yeah, I mean, who is it? Jim Chanos, who when Mister was up at the top, basically went short. Mister went short strategy and bought Bitcoin. What a trade! That was just a monster trade. All right, I'm just looking at a couple of things. Yeah, Google's coming into play. I mean, we could do one day. We'll just do a whole section and go through it. Yeah. So real quick, this is something that you'd have to dig through all my old live streams back in the day. They would have been on Wednesdays back in the pandemic. But somebody says, "Hey, Bob, do you think all the money is printed from 2008 to 21 coincides with big run-ups of all these tech cycles?" Absolutely. Matter of fact, one of the quotes in 2020, I was telling everybody when they were pumping all the trillions of dollars in, the best. It was funny because I don't remember where we could bring it up, but I think we were like 2,300 on the S&P, and I was talking 5,000 on the S&P back in 2020. I said the best inflation hedge that there is the stock market, is S&P 500. And we did go up to, obviously we printed almost 7,000, 69, just under 7,000. So yeah, so that is part of what we're dealing with. There, the debasement, and I saw a little bit of the Saylor and Tucker, and Tucker's become such a shill for whatever, and he's basically buying into it's the world that somehow we need to fix the currency and everything that's happening. I argued in, if you go back and read last year's outlook for 2025, I would tell you that, I talked about there's a couple ways to make the deficit, the 28 trillion bucks, a nothing burger, as you grow out of it. And you just start to see GDP at 3 and 6. And I think we'll see sometime in 27 or 28, we'll see something in the realms of 6+% GDP. And I have to find it. It's in it. I've made it so you can go back if you subscribe. But if you go back to probably 2 or 3 months ago, anything that was labeled GDP, had GDP in, and I'm going to try to find this because I've lost the link for this, but there is a calculator for GDP where you can change the tariffs, you can change all kinds of factors. I think there was maybe 8 factors. You could change GDP outlook, you could change it by year. It was actually it was a React dashboard that I put together just so you can play with the numbers and start to look at what happens. But the end of this, what we're really looking at is that the markets, there's no big collapse in the markets coming, mainly because of what we're talking about here. So thanks for the question. It was a really good one. Yeah, the same Earth Cruiser GT. Yeah, we're in an AI pump. Well, it's not an AI pump. It's an AI era that we're coming into, and I think it's probably the most significant thing that's happening to productivity ever in the history of man. Yeah, JPY, the carry trade, right? Somebody's talking. Mike's talking about that. Yeah, you have to call my buddy Hugh Hendry. He's been on that trade for like 4 years now, and it really hasn't worked. We'll see if they can pull themselves out of this again from that standpoint. But that's something I've been looking at. I have my old office. I moved an office to the new office that I'm in now, and I'm still moving out of the other one. It's like pulling teeth. But I brought some books over, and so I've got some research I'm going to do. I've got some downtime here over the holidays, so there'll be some good stuff coming out here soon. Let me just look at a couple more questions. Yeah, I saw that completely sold out of the cloud chips. I mentioned that. Yeah, Christoph, you're right. The dollar is king right now, and the U.S. is kind of in that mode as well. Yeah, great comments, folks. I'm just trying to look through some of this. John S. Hanging out with you reminds me of the good old days, hanging out with my grandparents in the 90s, 2000. Thanks. That's a good compliment. I like that. All right, a couple more, then we'll just call it quits here. Let's see what else we got here. Yeah, so Krista, AI plus robotics is quite the combo. That is absolutely, like I always tell you. I saw Elon on a little clip on X. I think it was yesterday. He was talking about how the robots are going to be able. Optimus will be like the best surgeon you'll ever meet. And I've even suggested, having been through a debacle with the healthcare system over the last couple of years with my wife, I can tell you that the best doctor that you have is right here on ChatGPT. It's probably your best doctor. I was in a meeting with two doctors, and I took a snapshot of her blood test, and there were some crazy numbers in there that were way out of whack, and they weren't paying attention to these numbers, and they were significant. I was sitting in the meeting doing this analysis, and then I challenged them, and they finally looked at some of the issues that was coming up, because it was indeed something that needed to be addressed. And they were just blowing it off. Well, we saw that, but we don't care. You know, do your own research now. But anyway, Optimus is welcome in my house as soon as I can buy one. So hopefully Elon can make them fast enough. We'll see. I don't want to be on a wait list. Yeah, it's interesting. Earth cruiser. So they pump and create. They're the opposite. They're telling you that AI is a bubble. And I was talking to somebody earlier today, and it's like they're gaslighting everybody. They're telling you to buy Bitcoin while it's getting absolutely bleeding out, and they're telling you that what's working is a bubble. So whoever is behind, we'll do the conspiracy theory. Whoever's behind what rhetoric's coming out of the financial markets, and I've said this before. Any of you have been around this channel, said you want to be a good analyst, turn on CNBC, or not even Kramer, just the typical person that comes up there, especially like I don't know, fast money, not fast money, that's Kramer, but some of those segments where they get all these guys around their retail managers talking like they know what's going on. You can fade all those guys. I mean, you just want to fade them. It's easy. Take the other side of the trade. And that's exactly what's happened with Nvidia. I mean, I was told a year ago by a number of people, hey, it's a bubble. You know, that was $3 trillion ago in market cap. So, you know, it's interesting because we live in an era. I was talking also to an old buddy who's older than me, that we were talking about, you know, I remember I was 36 years old. I got a big research job and I was running money and running the third largest division in a firm of 5,000 people, and also head financial analyst. And I was in my 30s, so I respect all you millennial 30-something folks. The problem that we have today is there's too much ideology around the markets. I've always been rogue on everything I've done, and you know, so but I'm hoping at the beginning of the year I'm going to start working in December. As I have a podcast I'm going to start, and I'm looking forward to some of those podcasts because there's some interesting people, and one of them knew me back in the 80s and said I was always like, he basically said ahead but different than everybody else around, and I'm still that way. And I see some things coming at us that I think are pretty phenomenal, and hopefully we'll be able to have some of those conversations, especially people that I've known for 30, 40 years. It'll be a lot of fun. And so we have some plans to bring in some pretty interesting guests, some even older and crustier old people that many of you have read about. And you have to remember, I've lived through things that many of you, I know I have a little older profile on my demographics on the channel, but then most of you have only read through stuff that I've lived through and traded through. And so there's a lot of wisdom and things that comes out of that. I had an interesting conversation with ChatGPT today, and challenging some of the things and bringing in some of my knowledge. I like doing that sometimes because I can really. It's interesting to see if you know what you're talking about, how you can change the narrative of what, especially if you were there, than what's being written, what's being told, and what's coming out of these large language models. All right, let me look at one more comment. We're going on. We usually spend an hour, so this is kind of fun. Hang on, I'm just trying to dig through a couple more comments. I saw something that was kind of triggering. Well, I'm not seeing it. Where are we at here? Yeah, we're at 53 minutes. Now it's fun hanging out with everybody. We just printed up, and they're trying to sell them off again. So that was probably the effort to make a new high. Looks like we might have failed. Not failed in a big way, but I think we see the futures on the S&P pull back pretty good here, especially coming into London. My PC I'm looking up is on the top. I have 4 monitors in front of me. The top monitors are my trading environment, and that's PC, and the Mac is what we're on doing the show. So anyway, folks, let's call it quits. Thanks again. I'm going to try to come up tomorrow. We'll see how my day goes. It's the day before I'm leaving, so if I can come up and do something quick, then I'll come up. We'll see what we get out of tomorrow after this little bit of this ramp up here, and see where we end up. Okay, folks, have a great evening. Thanks for hanging out with me, and we will talk to you soon. Like I said, get the Substack, kendallreport.substack.com. It's $8 a month. Annual, I think it's $6.55. It's $80 for a year. And then on the indicators, you can go over here, and you can do the indicators are 447 one-time purchase, There's some videos to support, but more importantly, what's coming out soon is I'm doing individual, what I'm calling just kind of pro tips and some really, 3-5 minute videos. I'm going to start just ripping these things out when I get back and putting them up on the channel. I'm actually planning on starting a new channel for the podcast and the education. We'll cross market in between the two channels, but it's more what I want to do going forward here. I enjoy doing the analysis stuff, hanging out these live streams, but I'm going to get into more consistent content around education, primarily around my world. And then on the podcast that we're going to do, I've got some interesting people. I have completely different views, and I'm just going to be try not to be a troll. I'll be good and be a good interviewer, and we'll talk about some things that because there's some of these folks I got coming on. There's questions. I have questions. So just on the techniques and things, and they've been successful at using them. So anyway, folks, looking forward to the future, and everything will be good. Remember, maybe tomorrow, but I'm going to be gone next week, and I'll set you up. I'll tell you what the plan is on Substack going forward. So anyway, folks, if I don't see you again, have a good holiday next week for those of you in the U.S., and I will talk to you soon. Have a great day.